Well, I'm a bit late this evening, but nonetheless, I have a new one to discuss. Another fan suggestion, the ARCC fund, and we'll compare it again to SVOL. Now, the one yesterday got a lot of attention because, I mean, a 69% dividend. Of course, something like that's going to get attention, right? But ARCC is I almost want to say it's a REIT from what I know, Ares Capital Corporation. So this one's actually paying 11.17%. And over the last 2 years, it's kind of fluctuated a lot. It's been kind of choppy. It's been as high as 22.58. It's been as low as 16.88 in September. Been around a while, but I'm showing since like 2004. Took a big hit during the Great Recession, all the way down to 471. Peaked out at 22.10 in January 2022. And so let me go to Yahoo Finance here and see here. Had to finish something before I could do my video today or yesterday. It's after midnight on the East Coast. Okay, so Yahoo Finance. So and I'm excited, by the way, for the podcast Wednesday. I've got two interesting guests this time. So I'll save that. I'll let it be a surprise. But as far as, okay, so Yahoo Finance, we're going to look up ARCC. And this one is actually not paying as well as SVOL as far as the dividends. So SVOL is actually back in the lead at this point. Now, ARCC was up 1.65% today, and it's up another 1.18% in the after hours, which is only, well, 29 cents as of close of market yesterday now on the East Coast. And as of before open of market in the after hours, up 21 cents. So you can see the maximum history of the fund here, going all the way back to November of 2004. And so, yeah, we've got a good almost 20 years of history on this one. So, and you can see $1.92 in dividends. Let's look at the dividend history of this one. Just look and see how consistently it has paid out. And let's see. I'm going to go here. Historical prices. We'll start over the past year. If I can get Yahoo to cooperate with me. Any day now, Yahoo. Okay. Dividends only. And I'll be right back. Okay, so quarterly. Yeah, we like a monthly, so quarterly is kind of a little bit of a deal breaker, but still not terrible. Okay, so going all the way back to October of 04. Looks like every quarter that we can see here, we've had dividends going back quite far. Yeah, going all the way back to 04, 05, 06, 07, 08, 09, 10, all the way to the last decade. And yeah, that looks good. So it's quarterly dividends, but remember, SVOL pays monthly. So at this rate, I do like the SVOL better. It's at 21.57, so it's actually dropped since last week, which I actually bought in last week. So that means I'm down. 17.79% dividend, holding steady. I feel like I'm talking about this one every day. Eventually, I have this one memorized. Oh, I didn't point out the expense ratio for the Ares Capital. Got to point that one out. So we'll go back to the summary tab here. And let's see. Expense ratio. It doesn't show. But the ex-dividend date was just March 14th. So this one's paying $1.92 per share per year. And oh, good, I am sharing. So let's see. Spreadsheet coming up next here. One spreadsheet analysis coming right up. Come on. Make sure I share the correct tab here. I had to close it out. For some reason, a lot of my bandwidth is getting used on this MacBook here. So what we will do, I'm going to close this screen share and then get another one started here in just a second. Once this comes up, come on. And this is sheet 7, lucky number 7. Yeah, I really enjoyed the video yesterday or Sunday afternoon talking about TSLY. That's gotten a lot of fanfare so far. So let's see here. I know I've seen ARCC covered on other YouTube videos, but this is going to be a new one here. So new one that we're adding to the family here. So we'll nest it right under TSLY here. We'll take our same template fields, copy and paste. So this is going to be ARCC. Same example, if you have $1 million that you've managed to save up in your whole working career, or you hit the lottery or something, or you found it on the ground. Not like that would happen. So $1 million, you say you buy ARCC with it, and ARCC again is currently trading at $17.83. So we'll go by that price. That's what it closed at yesterday. I don't know how that 6 got. Oh, wait, divided by. So that would garner us 56,085 shares. We already said the dividend was $1.92. So this will be a pretty straightforward, pretty easy example. Let me enlarge this screen, actually. Here we go. Okay, so, oops, we're back up here. We want to be over here. Cell 116, 192. Okay, center this, clunk, clunk, clunk. Lots of clunking. Times this one. This is what we would have in this example, 107,000. Still not bad, 6-figure income. But not quite SVOL. SVOL is all the way up here. Yesterday in these cells over here, we got carried away with the TSLY. Like if it keeps the 69% dividend, you could have like 40 million. You could like 400x your money or something crazy like that, which is awesome. And let's see where, oh, SVOL, of course, it's our favorite one, so it's at the top, right? So you'd have 176,000 with SVOL. So hands down, SVOL wins this competition today between these two. Yeah. Oh, some comments here. Yeah, I agree, Mark. Yeah, Aries does look good, but the dividend is not quite. Was I sharing my spreadsheet? You know what? This whole time I had Yahoo Finance up, didn't I? It's kind of kind of late over here. Oh well, I guess I didn't clunk live. All right, let me stop sharing this one. Let me go back to the spreadsheet. And now what is this? Share screen. Lots of crazy stuff with technology today. All right, well, so I was doing this, but turns out I wasn't sharing. So anyway, SVOL is up here, 176,000. We'll go back down to the one I just did, which I thought I was sharing. So again, $1 million. Center this one. 56,085 shares is what it would get you. It's paying $1.92 in dividends, which would net you $107,683.20. And over here is where we got carried away yesterday with compound interest, like 400xing our money with TSLY. So, but comparing this to SVOL, SVOL is still paying way more, like close to double, 177,000 if you round up. So SVOL wins this competition hands down, like I was saying. And I had a commenter that that kind of thought SVOL may not be too safe, but I've studied it. I mean, it looks good, but if you're worried about SVOL, you can always look into like the Guggenheim fund, the Goff fund, because that one, we looked at all like 15 plus years of history with that one, and that one's paid solidly, even during the Great Recession. So if you're worried about SVOL, you could always look at Goff. But as far as other ones, we do have other ones yet to come. I keep getting fan suggestions, and the more fan suggestions that I get, the more of them that I'll cover. I'll keep this series going as long as possible. But as far as today, that's the gist of Aries Capital. Let me see if I go back here, maybe read the company description and a few other nuggets of information here. Yeah, isn't SVOL great? I mean, SVOL is like our favorite. That's why I keep comparing every fund to it. But I think Aries was your suggestion, actually. So yeah, I picked that one today. But we can't beat that TSLY 69% dividend. That one's tough to beat. All right, let's go back to Yahoo Finance and let's see, Aries Capital Corporation. Glad to get some of you on here live. I'm a little late today, but better late than never. So yeah, Aries again, PE ratio. I didn't see an expense ratio. Like I said, just paid out its dividend. 1 year target estimate 21.18. Let's see. Last year it was like 21.83. 5 years, it's been at same 22. And what did I want to say? Oh, company profile. Company profile. Where's that? It's beating earnings. I guess this is a stock. See, it's actually beating earnings. Next earnings date, April 24th. There's a picture of Warren Buffett on the page, so that's how you know it's a good stock. When you see a picture of Warren Buffett. Just kidding. I feel like someone would say that. Market cap 9.71 billion. Here we go. Profile. Profile. Okay, there's the address of the company. There's the industry. There's the key executives. Now we're sold. We're gonna buy this at open to market tomorrow. Now, right? Yeah, it's in LA. So it's a BDC. That's what I thought because I've seen this talked about before. It's a BDC company specializing in acquisition, recapitalization, mezzanine debt, restructuring, rescue financing, and leverage buyout transaction of middle market companies. And if they're involved in those things, they certainly picked a good city to be in Los Angeles because they need some of that. It also makes growth capital general refinancing. It prefers to make investments in companies engaged in the basic and growth manufacturing business services, consumer products, healthcare products and services, and information technology service sectors. The fund will also consider investments in industries such as restaurants, retail, oil, and gas. They'll be out of California pretty soon with that. Or we'll see. What's this here in the middle? I see money. I see numbers. The fund typically invests between 20 million and 200 million and a maximum of 400 million in companies with an EBITDA between 10 million and 250 million. It makes debt investments between 10 million and 100 million. And they forgot the period. How dare they? Yahoo writers. Jeez. Yahoo Finance writers. Almost as bad as the sports writers. If this whole financial coaching thing doesn't work out, I'll just go into stand-up comedy. Right? So let's see. The fund invests through revolvers. Interesting. First lien loans, warrants, unitranche structures, second lien loans, mezzanine debt, private high yield, junior capital, subordinated debt, and non-controlled preferred and common equity, and other things that I sound like I know because I pronounce it well, but I don't necessarily know. So I'll just stop there. The fund also selectively considers third-party led senior and subordinated debt financings and opportunistically considers the purchase of stressed and discounted debt positions. So it's basically a BDC, a business development company. There's other ones like these, but some of these have collapsed over the last like 5 years or so. So BDCs can be, hit or miss, but I do think this is a good one overall. I do think this is a good one. S&P 500 is finally back above 4,000. Maybe it's time for those UPRO call options, right? I got some of those, but I got to wait for the S&P to get a lot higher. Hopefully it will this year. Anyway, so that's Aries. SVOL, like I said, still wins the competition, really hands down, because, I mean, you're getting 70,000 more in dividends if you follow this example. So with that being said, that's about all I had this evening, unless anyone has any other comments or questions. I'm getting like 4 of you on here live, so I mean, I can keep going. I don't have to stop, but I'll go ahead and pump up the Wednesday podcast. I'm going to have 2 interesting guests on, like I mentioned. Like I said, I'm getting a lot of people reaching out, like business requests or business ideas and things like that. And rather than, because I'm going to spend time, if I'm intrigued by it, I'm going to spend time talking to them anyway. So instead of just spending the time talking to them, I say just get them on here and go live, talk about it live in front of all of you, and let all of you decide whether it's legit or not. Yeah, JEPQ, that was my favorite, but it's just gotten to be too expensive, right? You can get you can get more bang for the buck on some of these other ones because, like SVOL is like half the cost. You've got this Aries Capital, you've got Golf, so the same dividend can be had for a lot less of the cost. But I do like JEPQ, and it had the 68-cent dividend that it paid, like in November. Like if you annualize that, it was on pace to do like 18% in dividends. But let's see where our friend JEPQ, let's see where he's trading at right now. 44.20. So he's lost a little bit from the peak, peaking around over 50. But the bottom was, again, the beginning of the year, January 5th. And yeah, it's been hovering around like the low 40s the last couple months. But yeah, it's a little pricey. I do like it. But like I said, you can get more dividend for the buck with some of these other ones. So with that, yeah, I would say I'll try to get a video out tomorrow, but definitely keep an eye out for the live stream Wednesday. So hopefully it's an interesting, legit business idea because I invited them on and they agreed to it. So we'll see. Maybe we'll grill them. Maybe we'll say, hey, what's up with this? What's up with that? It could be fun. So hope you all tune in for that. As far as this evening's video, that's about it. So like, comment, and subscribe if you haven't already. And thank you for those of you that tuned in live. And keep an eye out. Hopefully tomorrow I'll do another fun comparison. And hopefully the market's up tomorrow, right? So thanks again. Take care. Have a good evening.